So a quick one, I want to make a video on this non-farm periods of this month, the November. I came out for last month, November. Today is December the 4th, Friday. If you see, the non-farm period came in at a very low price. The forecasted was 469,000, but actually came out at 245. And if you look at the past history, we see that it was doing well before, and since the coronavirus hit, we see it started to go bad. And now today they came with a non-farm payroll estimate, and if you look at it, it is way below what is expected. They were expecting that the economy was going to be becoming good and people are going to be added or given more jobs, so that they will have people. Non-farm payroll just means that people that are going to be putting on payrolls, except people that are into farming, non-farm payroll. So we see that they have put less people into payroll. Why? Because of the coronavirus epidemic, or pandemic rather. And if we see, just after that, the unemployment change came in. The unemployment change came in at 62.1 thousand, increasing. Actually, they forecasted 20,000. Sorry, that was for Canada. The unemployment rate came in at 6.7%, meaning that it was reduced. Before it was 6.9% as at October, and the forecasted for November will be 6.8%, and now it's 6.7, meaning that they have less people that are unemployed or that are fighting for unemployment. But if you come to think of it, many people are even unemployed because of the coronavirus pandemic, so the unemployment rate will not have any effect or impact. So what is the effect of the unemployment rate on the markets? The EU, I call out trade on this point that you should go in for a buy. I actually entered at this I entered the market at 21.550 level. It gave me 15 pips scalp, which I took this thing and I put it on my WhatsApp status that if you are wise, you take your scalp. So the unemployment rate change was used as an excuse to take out the equal lows down here, because liquidity will be resting below. That is when people have their stop losses here. They've built their orders for some times now, and we see that the equal lows, it got to this place. Hence why I took these two positions. I mentioned that my daily bias for the euro dollar will be bullish, and we'll see that it's getting bullish. So they just use that unemployment rate to just use that as a pullback to take out the orders that are resting below this region down here. See, price creates a consolidation, so many people will have their stop losses there. So it was readed and now it's going back up. So if you are wise, you would have noticed that. So markets are totally flow. NFP is not easy. It's not something easy for you to trade, but if you have a good insight about the markets, you will know. Basically, the dollar is really bad, doing bad, and they are talking about some fiscal stimulus. Jerome Powell, the chairman of the Federal Reserve of the United States, is talking about helping the economy with some $500 billion. So the US is doing bad, and the euro is actually doing strong. It's strong, but we are seeing some news on the euro this week that is making it look as if the euro is really having hammer. Is getting hammered. If you look at it, look for especially the German manufacturing index that came out this week. Let me look for the day. Good. It's medium impact news. German CPI came out very low, as below expected. There's another one that was a very high impact news. So we see that the euro itself is getting weakening, and if we see the height in which the manufacturing PMI in the eurozone, the German economy is the most strongest. So watching the PMI of the German economy is very important. So basically, that's just it. I hope this little nugget will help you further your trading.